Hey everybody, welcome back to the channel. Today I want to go over the AM Silver Bullet on Friday, August 11th. So this red line here is we have high impact news on this day. And I want to show you what is going on before the Silver Bullet hour started so we can actually look and see how it was playing out beforehand. So when you look left, this 8:30 opening price is the start of the light gray, and we see a fair value gap. Price came up, respected that, and traded back down. We see another fair value gap here, also being respected there. And then we see, hey, there's an inversion fair value gap here, where that one came right up too. So then we see that sell side here has been taken, and we went from new week opening gap to new week opening gap, right? So from one end to the other. Now what we're looking for is, are we going to reverse and we're going to come back up here, or are we going to continue down? What's going to happen with this news candle is going to be very telling, okay? Alright, so let's go candle by candle. I'm going to buy or sell based on what happens, so let's take a look at it. Okay, I'm going to move this candle over just one so you can see the size of that candle. Okay, so obviously there's a market structure shift right here. Okay, I mean you can go with I'm gonna do a couple of them here. You can actually use this one here if you wanted to. You could use, for me it'd probably be this one, but so this one was higher, that's why I went with this one originally. So market structure is very subjective, okay? So I like to use the swing high that created the lowest low, right? So for me, it probably wouldn't be this one, it'd probably be this one right here, okay? This is just kind of like stalling and it still comes down. I'd say this is the swing high that created that. But this is higher than that one, so I just use the higher one. It's the same candle. Now if you're like, hey, I want to use this one, like I showed you, it's the same candle. So again, it's still very subjective. Okay, so I'm just going to use that one for a market structure shift. That leaves a fair value gap right there. Okay, and we also see there's also a mitigation block. So I'd use this. So low, high, lower low came through it. So now when it trades back into that mitigation block, we can take a trade. So now I've got two reasons that this is a good area to go long in. Plus we got a new week opening gap that is kind of like a magnet, so we'll see how that goes. Okay. There's a really small fair value gap right there. So we marked it right there. I would not take this one. I'm still looking for the deeper one. I always go, if there's two, I'm looking for the lower one. So let's see what we get here. And if it just hit this and ran up to a new week opening gap, I'm done. I'm not taking a trade. It's already hit my goal. So that fair value gap seems to be holding. So, it would be, you could take a long right there if you wanted to. I still like to see that it come down a little further. It'd be more in a discount down here. If I ran my fib from this low to this high, I need it to come down here. You know what I'm saying? Now I can take a trade in a premium to go long. You can. It's just lower probability, okay? So even if it comes in right in here and I take a trade, technically that's still in premium, but it is close enough to warrant along with a mitigation block, a fair value gap. You can even use the inversion if you really wanted to. Be back to a regular fair value gap now. So you have several things you could use if you got in, if it didn't come to, you know, constant encroachment or into equilibrium. So, okay, like that. Yeah, I'm going to buy 2 right there. Buy 2 contracts right there. My position right there. Where are we going to? New week opening gap. We're taking 5 points, which is right below that, and 10 handles is our target. You could target this high, you could target this high, you could target the highs up here. I'm just going for the easy win right here, which is, you know, 2 to 1 still. I'd take a partial if it got a close above this right here. So let's mark that on the chart here. Where would I take my partial? Right here. Okay, so let's lower this to 1. And let's see how it goes. Alright, I'm going to take 1 off there because it would have taken us out right there. My stop is now 1 tick above break even. Let's see if we get, and that one would have taken us out right there. So we're going to flatten it right there. Okay, there's our trade, right? Right there, done and dusted. Now, do we take out these highs over here still? Now, so there is a fair value gap right here, and you could have taken that right there. Would I have taken that? No. I've already got my 10 handles. If I wanted to go for these highs over here, I would have just left my runner on and just kind of like trailed my stop up. But I got 2 to 1. I got 10 handles, $500. I'm good on 1 contract. I'm good. So now I'm just watching price, see how it plays out. Could have used that fair value gap twice. Okay. Let's take this off here. Silver Bullet hour, we had news. So before that, we looked left. We saw that the fair value gap was being respected. Another fair value gap was respected. Took out sell side liquidity. Also went from new week opening gap to new week opening gap. An inversion fair value gap was respected as well. So there were several trade setups between 8:30 and 10 really that were really good, clean setups. So at 10 o'clock, the news candle, we were looking either for this low to be broken or this high to be taken out for a market structure shift. Yes, you could use this, this, or this for a market structure shift. I use this. It's subjective. I'm using this one because it's higher than what I would consider the real market structure shift. So, and it's the same candle that blew through all of them. So it doesn't really matter. So it left behind a fair value gap right here, which is right here. We looked left. We also had a mitigation block, a low, high, a higher low. Trades through it and then back down to it. That's a mitigation block. And if you see the wicks turn right into the mitigation block, you see where they go right here. So when it traded back through here, we took our trade. We took partials when it broke that high, and we were just aiming for, 2 to 1 or 1 to 2 risk reward ratio. So we got 10 points, going to the new week opening gap. Price traded up, came back down, and hit this fair value gap. I wouldn't have taken the trade. It's definitely in a premium. I wouldn't have taken it, but you could have, and it does work out for 10 handles. Twice. So it does give you 20 handles on this one fair value gap right here. Why do I say it's in a premium? Because if you would put your fib from here to here at the time, it's definitely in premium. If you go here to here, you're right at equilibrium for this trade. So this trade is probably a better trade. If you wanted to take a second trade, this one would be your better bet than this one. This one I think is chasing price. At least that's what it feels like, since you got entered here and you're at your top. You're like, oh, I'm just going to get in right away and see if it goes, takes out these highs. No. But coming back here, this is in equilibrium. So you could have taken another trade there and shot to take out this high. You don't. It's relatively equal highs, but still gives you over 10 handles right there. So that is your AM Silver Bullet for August 11th.